VP Nandakumar, MD and CEO at Manappuram Finance, to talk about how their numbers are. Mr. Nandakumar, great to have you today on ET Now Morning. Despite higher costs of borrowings, what's been driving this sharp increase that one has seen in NIMs, and whether or not they're sustainable for the rest of the fiscal, according to you?
Yeah, so it is because our gold loan yield has improved. Whatever is the increase in the borrowing cost, this could be passed on. So our customer base, their requirement is slowly going up. So the demand is coming. That is the reason for maintaining a good NIM, even if the rate of interest has slightly gone up.
Your
It
AUMs
seems like
then? Sure. Your AUMs have grown by around 21%, but most of this growth, as we understand, is actually coming in from the non-gold businesses. Going ahead, do you expect this to continue? And what is your outlook on growth rate for each of your businesses?
So even 5 years back, we have told the market that we want to diversify our portfolio, gold 50 and the balance 50. So now around 44% is non-gold. We hope that in another 1 year we'll be able to achieve 50-50 targets. So the diversified book gives us many comfort when the risk is diversified. Then growth also, even if one segment is not growing in a particular quarter, the other segment may grow. So this would balance the growth also. So that is the reason for diversification. And our diversification, as you have seen, is doing well. All our diversified loan products are doing well.
Morning. I just wanted to know what about the outlook from the performance of Asirvad MFI, because that's exceeded street expectations. How much of this book is secured with a collateral, and what kind of traction are you seeing?
So Microfinance, there is good demand. First quarter, we have little slowed down because we have some concerns about liquidity, even though there was no liquidity challenge, but those concerns are addressed. And now we have good liquidity for the company, and we are targeting a growth of around 30-35% in Asirvad.
And what's the plan and the updates when it comes to your capital raising? Because you had indicated for the MFI business that will be taking place. Asirvad as well needs capital for growth. Would you be looking to sell some stake? What are the kind of strategies that you are contemplating here?
As per the last balance sheet, we have 22% CRIR. So that is good enough. But still, we want to maintain around 20%. So, as the promoter, we don't intend to sell our stake at all. But for the growth capital, we may have to raise capital. So we may look at raising from outside also, even though decision has not been taken. But the may raise. But whether it is from private equity or a public market, it is yet to be decided.
Now, your costs of funds as well, they've risen quite significantly this time around, especially for your subsidiary. Why is that so? And how is this expected to move ahead, given that the RBI has maintained its status quo yet again in the policy?
So we have the liquidity, and we are confident about raising equity also, as and when required. The parent company is very well capitalized, and there also liquidity is no challenge. And the markets are improving because of the projected growth in the economy, particularly rural economy, where our segment, which is the bottom of the pyramid, the customers from the bottom of the pyramid. So they are getting the benefit. So we look forward with a lot of hope.
Your asset quality has deteriorated marginally. Credit costs as well have risen. So is there any stress on your portfolio? Because we did see some write-offs. Are you expecting more in the coming quarters?
No. It is, it is the lagging impact of the pandemic. We are very conservative, and from time to time, we wanted to clean up the book, and that is the only reason why it has slightly gone up. But in the coming quarters, it will come down. What we have projected is 20% it's CAGR, consolidated CAGR, and 20% ROE, which we are hopeful of delivering with improvement in asset quality going forward.
Kumar, great to have you on the show today and talk about your earnings and visibility going forward. Thanks as always. Okay, let's move on.